Hello, folks, and welcome back to another edition of Money in Motion. Today is Friday, Jackson Hole Day. Market's basically flat to start the day here. Still think it's kind of a bear trap, but we'll see. I mean, you really can't argue with yesterday's price action. That was quite brutal. I think there's definitely cause to be concerned, but I mean, everybody kind of feels that way. The equity put call ratio has been above 1.1 all week. So regardless if that's large hedging, people have been buying quite a few puts this week as price has been going down. But we're Jackson Hole's getting ready to start just here as we stream. So Monte, good morning. Long intro, but how you doing? What you looking at?
Yeah, good morning. Doing well. Hope everyone's having a good day. Happy Friday to you all. Everyone in the chat, what's up? Hope you had a good week. It's been a pretty turbulent week to say the least. And I think your point about yesterday's candle, that to me, I look at like yesterday's S&P candle and it just screams bear trap to me. But at the same time, it's like, you can't deny that there was a significant amount of sell pressure, that came in yesterday, and lots of longs got squeezed out. So today's gonna be a big day, like you said. Jackson Hole starting right. It's starting right now. Started at 10:05 Eastern. Spreadsheets. That's a great way to start the day. Mine starts with coffee and charts, but I think yesterday really was, it's hard to tell if it was a bear trap or not, but I want to go into some metrics that might tell us or give us some indication whether or not, we see some continued positive price action next week, or if perhaps yesterday's candle and today's Jackson Hole meeting puts in the top for the equity markets.
Yeah, we have Powell live now. It's rare we have him live when we're actually streaming.
Yeah, make sure you share a sound. Yeah, we can't hear you. You got to reshare your screen with sound.
I think it's better without sound, honestly. Watch the charts.
You're right. You're right. Fuck the sound. We don't need to hear what he's saying. You know what he's going to say. It's the same old rhetoric over and over again. One thing, though, that I do want to mention is that, everyone's talking about this as being like such a big catalyst, but it was only last year that Jackson Hole was really a catalyst. And okay, so the S&P fell 3%. That was a big move, right? I'm still laughing at the better without sound. 3% fall after Jackson Hole last year. That has a lot of people this year scared. We are very we're apes. We have like the mind of apes. We were burned last year. We're not going to touch that same stove, right? But historically speaking, Jackson Hole hasn't been a negative catalyst for price action. In fact, in most instances following Jackson Hole, price has continued to grind up a moderate, despite last year, this is quoting from Forbes here, despite last year's cataclysm, Jackson Hole historically does not swing markets. The S&P inched up an average of 0.3% in the month after the symposium took place, between 1978 and 2002, according to the Dow Jones data. So the month following Jackson Hole has typically been a positive one, but not very positive, 0.3%. What do you make of that data, CJ?
Yeah, I mean, that was kind of the point Tom Lee was making at the start of the week, where it's like typically when you see negative price action leading up to Jackson Hole, you get relief in the following week. I think Horst made a good points on Twitter yesterday as well, saying something similar, where it's like, August is a bad month as well as kind of September. So you've seen a lot of people on Twitter talking about how September is going to be negative as well. However, August seems to have been carrying the load pretty well so far. So maybe it doesn't have to be that negative. We'll see. Ultimately, we just kind of have to react to price. We're selling off here at least to start the day. It's going to really dictate a lot, I think, depending on the close. And even if we do reverse like next week, this could be pretty brutal in the short term, where you have maybe sell off Friday, sell off Monday, rebound Tuesday. But it's hard to predict. My guess is as good as yours at this point. I have to say though, I'm really just like so annoyed and like disgusted with crypto. Like why do we have to worry about sell pressure from FTX from like 2 years ago?
I know,
Like
right?
why am I in
Can
this
we
market?
can we put that behind us? Like, God, it's just lingering. Like, it's just not going away, and certainly impacting the markets this morning. Um, let's pull up some charts. We have yet to pull up some charts in today's episode, but I think looking at crypto, it's going to be. I think we might see some volatility pick up here. Maybe that's why you're in this space, CJ, because once upon a time there was some pretty interesting volatility that kept us entertained and made us some money.
And then we found futures.
Yes, and then we found futures and
I
options.
You can make anything exciting. You can make anything have a linear positive P&L curve. Um,
All right,
like,
all right.
like the-
Yes, we know.
all right,
Commodities
all
can be
right, all right.
exciting.
Go ahead, go ahead.
You don't need to stick up for your commodities. We know you know they can be exciting. Um, anyways, looking at ETH here in the 15-minute chart, lots of volatility surrounding the market open. Not too surprising given the whole Jackson Hole catalyst. And to CJ's point about yesterday, I mean, let's switch to the daily chart. This is the 15-minute chart, which, by the way, not looking great. That's what we'd call a Darth Maul candle, if I've ever seen one right there. Pretty perfect, actually. Need to watch Star Wars. Haven't watched it in a while. But going to the daily chart, I mean, that is just such a overwhelmingly bearish engulfing candle that you don't typically see. Not only that, but CJ, I'm about to pull up. The classic, the legend himself, the man that I strive to be in terms
The
of my
guy
trading.
who lost everything and killed himself.
Well, before that,
1920s Livermore. That was the prime era, not
yeah,
1930s Livermore.
yeah. So it does very much feel like we're at this 12 point in the S&P. I mean, the similarity between these charts, you brought it up yesterday, CJ, but scary to think about, right? Like is this the test before selling short? Is this the 12 point? I think it plausibly could be. And even though it does very much, like feel to me like a bear trap, like I am not eager to short following this massive bearish engulfing candle, despite the fact that it is a lower high and it is, that 12 point, that test before going lower that Jesse Livermore always says to look out for, that confirmation that makes your trade a lot higher probabilistically. But, it's just hard for me to short at these levels, especially when it seems like it's such a crowded trade still. Everyone is still talking about shorting equities and shorting ES. And I think until like the narrative, until like the sentiment isn't so bearish, we could plausibly see continuation of positive price action. So for me, like even if it's not a bear trap, um, you know, like that Forbes article said, 0.3% in the month following Jackson Hole, 0.3%, that would carry us up to like where? Like right around here, 4,500. Um, I mean, does that seem out of the realm of possibility? A month of consolidation, into like this 4,500 range where we don't necessarily make the tops. I think this could be like a long period range for the S&P because we have such bearish sentiment and the bears are going to keep trying to short it, keep getting squeezed out, but there's not enough buy pressure coming in or bullish catalysts to break us into new highs. Those are the conditions that set you up for range bound price action. And yeah, to Phoenix's point, we were talking about this a few months ago and talking about being in a 6 to 9 month or being in the 6 to 9 range. I think that is very possible. And just based on the way people are positioned, based on the current economic state of the market, um, you know, I could see sideways consolidation for quite some time. But what are your thoughts on the current equities price action today, CJ?
Well, we're up over 1% in the Nasdaq now. I don't know what Powell is saying specifically. Maybe some of you guys in the chat who have dual monitors up can enlighten us. But yeah, I mean, you just like you have like you think about the first year or the first half of this year, short squeeze propelled us higher through hedge funds. They're all out. They actually, I think they're buying in earlier August and late July. It was twice the volume of their initial shorts at the start of the year. So you just have all of these longs up here and not a whole lot of catalysts to drive us into new all-time highs just yet. I'm willing to reverse that view if we break into a new higher high. But and I also would kind of make the argument that there's always going to be some bears like on fast money, but I will say half of the fast money team was pretty bullish at the start of the week before yesterday. I'm curious to check in now, but yeah, I know it's tough because the sentiment, is one thing. You also have the futures reports, then you have the equity put call ratio, and it's not really giving anything that distinctive or like clear. But yeah, I'm ready to pull up some charts.
Go right ahead, my friend.
Let's see what's interesting. Real estate continues to do well. I mean, at least this week.
Yeah.
Dollars down. What was that?
Real estate doing well. What about energy?
Energy is doing well. Well, not XLE. It's kind of doing well. I'll talk about energy right here and the mistakes I made. I'm pretty kind of emotional and upset today, honestly, just about some mistakes I made.
Hey, but see, that's important though to people that don't get upset about their mistakes or people that don't learn from them,
Or they blame the market.
Yeah, like they're like, "Oh, it's not my fault." Like you need to get mad at yourself sometimes. And that's like goes back to what we were talking about yesterday, the hour between the dog and the wolf and like that mental scarring. It's like a literal battle wound so you don't make the same mistake twice. And I know you of all people whom I know very well, I've known for over a decade now. Like I know you're very hard on yourself when it comes to making mistakes. And I think that's why you're such a good trader is because you don't make the same mistake twice because once you make a mistake, you're very tough on yourself about it. So
I also
sorry for
just
him.
think it's the pain of
Yeah.
not wanting to feel the pain of losing money again. Um, that conditions you. You talked about that yesterday as well in the hour between dog and wolf. But yeah, anyways, let's talk about heating oil. This is one of the most crowded trades. This is one that I entered on Monday, I think, or Tuesday earlier in the week, after this bearish candle. You know, did nothing for the first 3 days. However, CL had like one of its worst weeks. Um, so we just didn't get the breakdown that we got with CL in heating oil, and that was pretty disappointing. And it wasn't a trade that I think I needed to take. And the same thing was with like cocoa. You know, we talked about like maybe the 10 points. You can't really see this here because it's a liquid, but this was the first trade of the day. So it's up about 2% and about to take out that 10 or 11 points that we look at in comparison to like the Livermore chart. However, platinum has done like nothing but go up this week. And so, you know, that was my best entry was like last Friday at the start of the day was when I bought platinum. And it's been one of the easiest holds. It's gone up ever since. In the weekly report that I published on Sunday, the only position that I had open was platinum. And the key thing that you have to remember, and what I have to just stress so carefully is that you have to understand about 30 to 40% of these trades are only that many are going to work. And about 70 to 60% of the time, it's not going to work. You're inherently playing a game or at a casino that you're going to lose. So, how do you win over time and make money? You have to win. You have to make your winners larger than your losers, right? Everybody knows this. But when you get into practice, it requires a lot of patience. And last week, I was coming off an all-time high in my futures account, and I got too overconfident, and I did not need to put these extra trades on. And they ended up just derailing my progress and leading to me losing money this week, even though the fact that platinum has done nothing but go up, which was the only position I had at the start of the week. So the bottom line here is that we are our own worst enemies, and inherently, since there's only like 30 to 40% chance that these trades are going to be right at any given time, it's so important to just stay with the ones that are working and just forget all of this other noise. Like, I have to be at the point where I'm more comfortable watching a missed opportunity sidelined than trying to hit every single opportunity. And that was just one thing that I just really didn't do well this week. But you know, mark it out, go through the Excel file, and you know, we got another week next week. So, you know, it's like baseball. I played a lot of baseball in my day, and then played a little in college. And it's like, um, you know, you just try to hit the ball solid every time, and you're gonna fail like 7 out of 10 times, and that's still successful as long as you're making good contact and doing the right things over time. Um, you know, it's all about the process. And I just think I got a little derailed from that this week. So,
Yeah, it's a good analogy. I mean, there's a lot of times where you can make solid contact and, you know, hit a rope, but it just happens to be, you know, right at the left fielder and not in the gap instead. I think the same is true trading. Like sometimes you have the setup, and you know it'll be tested like over and over again. But if you have that setup in mind, and you have, you know, the proper R&R, you have, you know, like I said, defined risk. I think, you know, things will work out. Um, Keith says CNBC, Powell moderately hawkish. This is what the market's looking like right now. I mean, my God, what a nightmare to trade this thing. This is ES. Uh, so he must have been pumping it up and then dumping it down here. I'll have to go back and watch and see exactly where the turning point occurred. But just out of curiosity, let's see.
I mean, honestly, I think it's probably better he's hawkish here than dovish because like being hawkish, there's still the potential of rate cuts in the future that could propel prices higher if people want to try and front run that. If they were to come out and say, if he was to come out and be really dovish today and the market respond by closing red, that's something that I think I'd be very concerned with. Sorry to interrupt. Go ahead.
No, you're 100% right. And I was essentially about to make the same point. If that would be that's the most concerning scenario. And it's looking like it may actually be the case. We'll see. I mean, the real test for me, I think, will be once we get back down to where we opened up or where we closed yesterday, excuse me, right around this 43.75 level. If we can bounce from there, perhaps we, maintain these levels into next week. But if not, we could see some real bearish price action next week, and finally, some of those bearish trades that people have been talking about on CNBC and all the talking heads on YouTube might finally be right. Or
nah, their puts expired, worthless last month. But I mean, at this point, it's
no. See, and that's the thing is, like that when I laid out my thesis for the S&P is like, I think it's just going to be a scenario where it gets overcrowded. People keep trying to short it, and as a result, it just stays flat, right? Because we don't have enough buy pressure to send us a new all-time highs, but shorts covering are enough to keep us at current price. So we could plausibly trade sideways for 3-4 months. That would shake out any put just because of time decay. No matter how out of the money or in the money you were, it doesn't matter. If you're holding a put that traded sideways for 3 months, it's going to expire worthless. So it's like, it's tough to jump on the bear train here. I don't want to do it. I'm not gonna do it. But we'll see what next week looks like. For the time being, I think we just got to be patient and wait for more clarity. Last thing I have to say before we wrap things up, just real quick, is the TNX. I think is going to be important to keep an eye on next week. My little cousin, he's in middle school, and he texted me yesterday. He said, "We're doing a paper trading contest for econ. What should I buy?" And I'm like, "Are you allowed to buy options? Or are you allowed to short the market?" And he's like, "No, we can only just buy stock."
Yeah. How about an inverse ETF? Can you put it all in SQQQ?
Yeah, right. I thought about telling him that, but I'm like, no, that's degenerate of me. I'm like, you know what? It's honestly not even about the performance. It's about impressing your teacher with a well thought out thesis. And I said, the TNX I think looks good for a breakout. When you look at ES compared to TNX, I mean they're polar opposites, and I think TNX above 440, I think this really carries up into the 4.6% range. And if we see equities go risk off, of course we see the treasury notes just continue to increase. So that was the name I gave him, TNX, if it means anything. At the very least, I hope it impresses his econ teacher that he actually knows what the 10-year treasury note is. I had to explain to him what it is, but I don't think anyone else in his class will be trading that, so that'll be interesting. But I remember when I did it, everyone just bought Apple, and everyone that bought Apple ended up just all tied for the win. But that was 2013, very long time ago.
Yep. Well, best of luck in the fixed income markets. I'm sure that'll be exciting over the next year or two. But yeah, appreciate you guys. Thanks for the participation as always. And I hope you guys have a wonderful weekend. Don't forget, if you enjoyed today, please like and subscribe. And check out our 14-day trial here at tradethechain.com. We have a Discord server where Monte and I provide trade insights and updates as we trade in real time. And then we also have a crypto sentiment indicator dashboard with a lot of really cool tools that I encourage you guys to check out for crypto. And like I said, you can get a 14-day free trial, money back guaranteed if you don't like it, but we think you will. So check out tradethechain.com. Thanks, guys, and we'll see you back here same time on Monday.